Moving forward with our project here, and we are still on the third part, cycles in trading Ichimoku Kinko Hyo, trading binary options with Ichimoku Kinko Hyo, trending cycles, bullish cycle interpretation and strategy. And this is the second recording, because on the previous recording we've looked at one strategy to employ whenever you have a bullish cycle. So again, a bullish cycle means you have Tenkan, the red line above the Kinjun, cloud it is turning green, Chinko should be above the cloud in front of it, and that would be the first condition for a bullish cycle. As long as these conditions are holding, like you have here, we are looking for a strategy for a one-with-one sequence or a continuation pattern in relation with the Tenkan. And you have the two examples here. So we are looking for traders who wait for a candle that closes below the Tenkan line. So below the Tenkan line here, okay, so touch the Tenkan line and close below. So basically looking for a red candle that touches the Tenkan line and closes below it, and the very next candle to be a green candle that closes above the Tenkan. That would be our signal that we should employ in buying calls. We are looking to establish long positions there. So even if you are trading the currency markets or you are trading the spot currency market and you want to go long, there is an appropriate moment to go long, because this is normally being interpreted as a continuation pattern. It doesn't mean that the price will explode to the upside, but it means that either price would consolidate from that moment on, I don't know, in a contracting triangle or an expanding triangle or something like that, or will just continue to move to a next level. You have one example here, and the next example is here, exactly the same. A red candle to the downside touching the Tenkan line, followed by a green candle that closes above the Tenkan line. There you go, a continuation pattern. Buying calls is the only way to treat that, and the expiration date should be different depending on the time frame used for this strategy. I would not look for smaller time frames than the 1 hour chart. So on the 1 hour chart you might look for expiration, for end of day expiration. On 4 hour chart you should be careful, depending very much on the moment of time the 4 hour candle closes. If you are looking at the 4 hour candle that closes at 19 GMT, for example, then that should be treated with caution, because it is right 1 hour before the US equity markets are closing, and price is going a bit hectic normally during the day. But if you are looking for a 4 hour candle that comes before the London session, then you might buy calls with short of expiry date. Now that was the first strategy to employ when looking at bullish cycles. Another strategy would be to wait for the Chinko line. Now what is the Chinko line? Going into our project here, you know that the Chinko line is the green line, the lagging line here. So this is the Chinko line. Let's write above here that is the Chinko line. So another strategy would be to wait for the Chinko line or that green line to come and get close to the price, and by the time it gets closer enough, look for a bounce, as this is happening almost always. What does it mean almost always? It means that the Chinko has the strong tendency to avoid the candles in front of it. All the time the bullish cycle that starts here, all the time the bullish cycle is holding the bullish cycle conditions. So all the time these conditions are being met, the Chinko has the tendency to jump when it meets the candles in front of it. Take a look here. It is approaching the candles in front of it, and by the time it gets closer, 26 periods ahead is the actual price, and there you go, you have that bounce to the upside, price basically going and making something like from 132 area into the 133 area, so almost 130 pips on that move. Again, buying calls is the only way. So buying calls is the only way this should be treated. But here we can choose more easily the expiration time, as the time element is treated when dealing with the Chinko. All we have to do is count the distance from until the Chinko meets the price, and that would be our expiration date, as by that time, if trending conditions are strong, price should be higher, and the trending condition should be strong because we are in a bullish cycle. So normally here, by the time we are having the Chinko testing the price, let's mark this area. So that would be our signal here, right here. Let me change the color for it. So that would be our signal there, and from that moment of time we should look 26 periods forward, because when Chinko is actually meeting the candles here, price is finding itself around here, and that would be our moment of time when we should look to apply bullish strategies to buy calls, and normally the expiration date would be given by the same period, and that would be something like this in this contest. And there you go. On the 4-hour chart, you have the time element taken into consideration. You have the bounce that is almost always happening when Chinko is approaching the price, and whenever it fails, for example it fails here, this is a weakening sign. Already your bullish cycle ends here, so this is a weakening sign that something is going on. So you might say, well, if the bullish cycle ended here, why we go along here? Because this entry belongs to when Chinko was being in a bullish cycle. So that is the bullish cycle, and because the signal has actually appeared here 26 periods forward, and we're looking to apply to buy calls, and there you go, you have 1 2 3 4 5 6 7 8 9 multiplied by 4, so 36 hours in which you can choose the expiration dates for your buying calls. Moving on now with the bearish cycles and see what strategies to be employed there. Stay tuned, please.